Okay guys, so in today's video I'm going to be teaching us the meaning of fundamental analysis, everything you need to understand about fundamental analysis. This class is generally for Forex Fundamentals Masterclass, and you're going to be understanding what really moves the market. You know, in trading we have three types of analysis. We have the technical analysis, we have the fundamental analysis, and we have the sentimental analysis. Technical analysis talks about how we use charts, patterns, and candlesticks to determine what is going to be happening in the forex market. It's all about price action. You buy at support, you sell at resistance, you wait for market to form a BOS before you buy. These are all technical analysis. They are technicals. Now, sentimental analysis is just you understanding what the market is going to be doing using your mind, what your sentiment tells you about the market. And when we come to fundamental analysis, it's all about using news and other data releases to understand what the market is going to be doing. This is all about fundamental analysis, and it is very, very important if you know it as a financial trader, because almost 90% of what happens in the forex market, they are moved by fundamentals. Yes, they are moved by fundamentals. Yes. Now, so we're going to be starting immediately in our class. Now, first of all, what really moves the market? You need to understand that forex is not moved by trend lines alone. Currencies move because economies change. Yes. Now, forex trading happens to be the largest financial market in the whole wide world because it has a daily trading volume of about $7 trillion. And now, the reason why forex is also the largest market in the whole wide world is because it is moved by economies, and economies happen to be the bedrock of a particular nation. Now, if your country does not have any economy, your country will probably not move. USD is regarded as the most valued currency in the whole wide world because of the economy of the US. You understand? Now, the market is moved by economies, and economies affect the market because economies change. It is not stagnant. It always moves. The price of GBP USD could be 50 today, and then tomorrow it can skyrocket to 61 because economies change. There was a time when XAUSD was at 5,500, and I even predicted the buy that it's going to be hitting 5,000, of which that it touched 5,000. But recently, as of the time of shooting this very video, XAUSD is down below 4,005. You understand? Now, what are the four major things that move the market? Because in this my video, I'm going to be telling us the four major things that move the forex market. Number one is what we call the interest rate. Number two is what we call the inflation, and number three is what we call the GDP. If you can understand these four powerful tools, four powerful factors, then everything about fundamental analysis will be very, very simple for you. You understand? Now, before I ever analyze the market, one thing I do is that I first of all shake up the fundamentals. Then after shaking up the fundamentals, that is when I'll now have to dive into my charts, then start looking for zones, technical analysis. That is just it. Now, after analyzing technically, if it aligns with my fundamental analysis too, then it's going to be a very great something. I remember that sentimental analysis shouldn't be overemphasized because you need the three of them. In fact, you need a strong sentiment to be able to decide what you should do fundamentally and even technically. You understand? So both of them are guided by a strong mindset. So technical analysis, fundamental analysis, and sentimental analysis all put together are very powerful. Now, in order for you to understand fundamental analysis very well, there is this very website which is called forexfactory.com. This forexfactory.com is a great website because in it we have the currency, we have the impact, we have the time, we have the actual, we have the forecast, we have the previous, we have the color coding. Then I'm going to be explaining every one of them. You understand? Now, you already know the meaning of the currency, what a currency is. Currency is just like a medium of exchange. We have the United States dollars, we have the Canadian dollars, we have the Ghanaian cedis, we have the Nigerian naira. Then going to be looking at their impact too, their time, their actual, their forecast, their previous, the color coding. Every one of them I'm going to be explaining them short like soon. You understand? So these are just the things we're going to be looking at in our forexfactory.com, because in our forexfactory.com this is just like a calendar that's going to be guiding us on what should be focused on when we analyzing fundamentally. You understand? After determining the currency, then check its impact. Then at what time is it going to be happening? Then we have previous data. Then we have the forecast, the ones that analysts predict. Then we will have the actual one that finally came out. We have the color coding, which we use to like filter out those that are strong, those that are less strong, those that are medium. You understand? Then we have lies, the high impact, the medium impact, and the low impact. This is going to be explained when I dive into the Forex Factory website. Now, how to read economic data. This is very, very important. If you want to become a great fundamental analyst, you need to understand how to read economic data. Now, when we dive into our forexfactory.com website, we're going to be seeing the previous, the forecast, and the actual. The actual, I'm putting it first. The forecast is in the middle of the previous. But when it comes to forexfactory.com, we're going to be seeing the previous first, because the previous has already happened. The forecast is the one that analysts are predicting. Then the actual is going to be the real data. Yes. So, but the reason why I specified it like this is because this is usually the greatest. Even though in real-time world, this usually comes last. You understand? Because we are yet to know what will happen. But once it has happened, this is the greatest. So now, previous is just like, okay, during January, okay, during yesterday, okay, let's say during last month the data for GBP USD was very strong, around 5%, and then we now have to get another release for that of this month. So now that of the previous month was 5%, and it made GBP USD strong. Then forecast analysts are saying that, okay, we've dived into the economy of GBP and USD, and we have even known everything that is going to be happening. So we are just like saying that of GBP USD for this month is going to be around 6%, like a bit above, like a slight height above that of last month. Now that is the forecast. The previous, understand, it was 5%. The forecast, they said it was 6%, because they have scrutinized the economy of both currencies. Now the actual is what is the main data, because analyst, it doesn't end with the prediction of the analyst. You understand? It ends with the actual. Now when it comes out to be 6%, it's going to be a great news. And if you actually traded it, you're going to be making money, as long as it follows, like it aligned with your own prediction. So this isn't the like the real way of how it is done, but this is just like a scope of how it is done, not the real actual way. You understand? So now that is what you need to understand whenever you are reading economic data. And before I dive into the next thing, you need to understand something, that fundamental analysis respects two things. Like the two major things that move it to, like two things you should concentrate on, is what we have: the expectation, and then we have the real movement, because market respect expectation first before it respect the real actual data. What do I mean by this? Now already the previous was around 5%, and then during the forecast people were saying GBP is going to be around 6%. Maybe there were moves that actually align with this very prediction. Like there were moves that boosted it, so everyone knows it's going to be 6%, even though we had to have the actual. But everyone, we are like, we're going to be seeing 6%, we're going to be seeing 6%. Like everyone knew it. Even if you ask a lad will tell you, why not? We're going to be expecting 6%. So now when the actual came out, the actual could be 5%. Now because the actual was 5%, that doesn't mean that most people are not going to be making money. Most people are going to be making money. Why? Because the market will first of all respect the expectation. What was that very expectation? 6%. So everybody already clinged to the fact that it's going to be 6%. So most people are going to be investing big time around that very particular time that the data was released. Most people are going to be investing, and within a short moment of time you could make money. Then it's not going to be after that the market will respect the actual data. Now market came out to be around 5%, that was actual, but most people are still going to make money because of that very expectation. The expectation was very, very high, so the market will respect it for a moment before it will now respect the action. So that is why most people, after they made money trading fundamental, like trading news, like they made money trading it, but later instead of them to exit the market or to exit the trade, the market will still reverse, and you'll be like, what happened? Am I not right? You right, actually, because the market first of all respect the expectation before it now respected the actual. You understand? So that is one thing you need to understand too. And you are going to be okay, that's going to be, by the way, when we dive into the Forex Factory website, I'm going to be explaining all. Now, which one matters? We have the previous, we have the forecast, and we have the actual. Because in your Forex Factory, this is the first one you're going to be seeing. Then now let's take, for example, now the previous was 2.2%, the forecast was 2.4%, meaning that analysts are saying that it's going to be climbing in percentage. Now the actual came out to be 2.8%. Now there is what you need to understand here, because that is where most people get confused too, even those of them that are very familiar with how all these things work. Now let's take, for example, that the actual came out like, because the forecast was 2.5%. now this means that if the actual should come out to be 2.4%, then analysts, they are wrong, they are right. You understand? Like, they are very, very right. And if you traded it in alignment with this, you're going to be making money. If the actual came out to be 2.5%, you're still right. If it came out to be 2.4%, you're still right. If it came out to be 2.7%, you're still right. 2.8% should be very, very right. But if it came out to be below 2.4%, maybe 2.3%, even though it is above 2.2%, you are wrong. Understand this very thing now, because most people will be like, oh, forecast previous was 2.2%, forecast was 2.4%. now actual, if actual should come to be 2.3%, as long as it is still bigger than 2.2%, which is the previous data, I should be right. No, the market does not have anything to do with this again. Yes, it is very important, but when we want to like shake the ones that matter, it is the forecast and the actual. Now as long as it came out below this very forecast, maybe 2.3%, even though it is above 2.2%, you are still wrong. You understand? So that is why everything you're doing should always, like, you should focus on this very thing. So if you are saying that it's going to be 2.4, like, you need to analyze very, very well, even though maybe you're going to be getting a bit confused here, but let's dive in more, because soon you're going to be getting your head around what all these things mean. Now, what is the meaning of interest rate? Because that is the first thing we're going to be diving on. Remember that I said that there are four major factors that move the market very well. Number one, it is the interest rate. Then we have the inflation. Then we have the unemployment rate. And then we have another one which is called the GDP, which is gross domestic product. So first of all, we're going to be starting with the interest rate. What is the meaning of interest rate? Interest rate, like, even from a layman's understanding, you should know what interest means, like the return you make after investing in a particular something. That is just interest, because the sole aim of every investment is what is interest. You don't want to just buy because it is worth buying, or you know how to click your buy and sell button. Of course you should make money doing it, yes, because every business, they are always operating to have interest. The reason why you're trading forex is because you want to make money. The reason why Amazon is doing their business is because they want to make money at the end of it all. You understand? So now, what is the meaning of this very interest rate, and how does it affect markets fundamentally? Now let's take, for example, during 2025, I think late 2024, early 2025, there was what happened between Jerome Powell and Donald Trump. Jerome Powell used to be the federal chairman, like the chairman of the Federal Reserve, and their job is to control interest rate, like to be able to guide on how interest rate should be. And then Donald Trump was the president of America, and currently is still the president of America. So Jerome Powell always stick to his word that they are not going to be cutting rate, that the rates are going to be held steady. While Donald Trump was telling him, kind of pressuring him, cut rate, cut rate, cut rate. Now most people are like, what does this even mean? How does it affect the market? It affects the market big time. Now when you are investing in a particular country and their interest rate is very, very high, it is going to be making that very currency to be strong. Yes, it is going to be making that currency to be strong. Now let's take, for example, you went to America to invest in America, like you want to trade in America, or when you got there, their interest was very, very high. What I mean by interest is not even the interest you're going to be like generating when you invested, like for your own good. Is a kind of interest that you're going to be paying, you understand, for their own benefit. So when it is high, it is going to be making their own currency to be strong. Whereas you yourself, if you can't afford it, you know that it is not going to be possible again for you to buy it. So that is why when interest rate is very, very high, it makes the currency strong, but alongside to it does not attract much investors, you understand. Now you know that more costly things are not even bought, because people will be like, this thing is very costly, so there's no need of me buying it, it is very costly. So and they'll be like, this is a rich man something, you understand. So that is my of interest rate. You see it, when interest rate is very high, currency usually stronger. Then when interest rate is very low, currency is usually weaker, because when interest rate is very, very low, it is going to be attracting much investors. Oh, interest rate is low, come on, borrow me money. Now you have the Okash app, you want to borrow $10,000, I'm just assuming. Then they said, okay, the interest rate you're going to be paying is what, $50, and you have another app too, you want to borrow $10,000, and they say the interest rate you're going to be paying is what, $100. So you're going to be going in for the first one, because that first one, the interest rate is very, very weaker. Yes, like the interest rate is very low, so it is going to be attracting much investors. So now when you push into there, it does not increase the value of all cash. Now you understand, like generally it does not increase their own value, even though it attracts much investors. But you know that if more people can afford it, that thing does not have much value. Something that has value can be rarely afford. Do you understand now what interest rate is all about? Now in the time of market, interest rates, when is it very good for interest rates to be rising? Because that is where inflation comes into place. Now what is mean of inflation? Inflation means that prices are rising. Imagine now when you come to a particular country and inflation is very, very high, things are very costly, this is happening, like things are very costly. Don't you know what that means for you to go to the market to get something like what you bought $2,400, when you went to the market again, the price has skyrocketed to maybe $3,000. Things rising very fast. What does that mean? Don't you know that it can affect everything in the market? So that is what we call inflation. Inflation means that prices are rising, and whenever inflation is very, very high, central bank may raise or keep rates. Now imagine now in a country where inflation is very high, central banks should not cut rate, because that was what happened in the scenario that I gave between Jerome Powell and Donald Trump. Donald Trump was telling him, cut rate. Why Jerome Powell was considering the high inflation in America. Now you can ask question, why not cut rate when things are rising very fast? Imagine prices are getting higher, poor people cannot buy, and still you don't want to cut rate. Now when you use, because more people cannot afford it and they start cutting rate, you are going to be devaluing the currency. You are going to be devaluing the currency. And whenever the central bank are taking the decision, they are not even taking it to respect the view of poor people, to respect the fact that there are poor people. No, they want to naturally curb everything. Now they need to keep inflation high. Now first of all, how can inflation be high in a country? Inflation can be high because things are like the more people, there is more money now in the country, like more widespread of money. You understand? That is what can increase inflation. When there is widespread of money, yes, in a particular economy, that is when inflation can increase. Now imagine now, since there are widespread of money and central banks start to cut rate, don't you know that very widespread of money will still increase, to still be very, very numerous, and this can decrease the value of a particular nation, because you have $1,000, I have it, I want to build a house, but there's no one that wants to help me build it. There is no worker because everyone is rich. So how then do you expect yourself to keep doing well? So have you seen it, what it means that like we now have inflation, prices will now be rising because everyone get money, so you can afford it, so that is where it gets risky to cut rate. Now when prices of things keep increasing, the central bank may not want to cut rate, because if they cut rate, they will still attract more investors. When more investors now are exposed, when more investors now finds their way into a particular nation, that is going to be making the inflation to keep rising and rising. So they want to keep rates or even increase it a bit. Now when they increase it a bit or keep it, first of all, the door for more investors are being shut. Now the nation is going to be naturally restructuring things, and by that way inflation will keep cooling naturally, because more investors are no longer coming in. Now the market is just naturally cooling within that particular nation. The government is going to be working on unemployment, working on this, working on that. Before you know it, the price of the things are going to be decreasing. You understand? So now when rates are very high, currency is also usually stronger. Remember what I mean? Because if something is really afford, like if more people cannot afford it, that thing, it has value. You understand? So that is the meaning of inflation. Remember that for interest rate, when it goes up, it is going to be making the currency stronger. When it goes low, it is going to be making the currency weaker. And the reason why interest rates can go up is when there is high inflation. So now when inflation is very high, that means that central bank may raise rates or even keep this very rate, and when it happens, currency can be weak. But when the central bank start to cut rates, then it might make the currency to be weaker. Now we go over to what we call the unemployment rate. First of all, we have the NFP, unemployment rate. Now what is the meaning of NFP? NFP means people working excluding farmers. Now in our news, like when you go to Forex Factory, you're going to be seeing a lot of things about NFP. You'll be seeing NFP alongside unemployment rate, and you'll be like, what is happening? NFP means non-farm payroll. Now you know that we have many jobs. We have farmers, we have bankers, we have this, but the reason why farmers are not included is because their scope of job is not something that is always standing still. You understand? You can be a farmer now, and maybe like they are seasonal. You can be a farmer now, maybe in the next month you're no longer farming. Like you now be harvesting, you now be selling it. So like it's something that is seasonal. So that is why instead of causing jumps and like a lot of jumps, the American, they decided to not to involve it, like not to include farmers. So now it will now be people working excluding farmers. Now when we talk about unemployment rate, it's just all about people needing job, but they can actually get job, but they are just needing job. So just like the unemployment rate. So now when unemployment rate is very low, okay, when unemployment rate is very high, there is going to be a weak currency. Okay, this thing should be high. So when unemployment rate is very, very high, it is going to be making a particular currency to be weak. Imagine in a particular country, more people are unemployed. It's not good for a particular country. So it's going to be making that very currency to be very, 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 very weak. But when we have low unemployment rate, more people are employed, then it's going to be making the currency to be very, very strong. You understand? So have you seen how this thing also affects the market? You understand? Now finally we have the GDP, and GDP is gross domestic product. GDP measures economic growth. Now a GDP is just like the worth of our economy. Now you know that we have people and they have net worth too. You can say Elon Musk is worth $1 trillion. Jeff Bezos is worth $103 billion. This person is worth this person is worth that. That is also the same way you can say that a country is worth this. So gross domestic product, we also have gross national product. Gross national product is the value of a particular country's production, like just within that very country. But when we talk about gross domestic product, it is the value of a particular country's production, goods and services, both inside and outside that very country. Because now we have Nigeria, for example. Nigeria has goods and services there that are being produced in their country, and it also has other investments outside Nigeria. So every one of them put together, here was the gross domestic product. So now, in order for a country to becoming very stronger, it should have a gross domestic product that is of a bigger value. That is why GDP measures economic growth. Imagine Nigeria this very year had a gross domestic product value of 5%, and then next year they will have 8%. Is a positive something for Nigeria, because it signals that Nigeria's economy keep on doing well, and whenever it is doing well, we have a usual stronger currency. Okay, now so this is the Forex Factory website, forexfactory.com. That was how we got here. Now can you see the calendar, the way they look? You can see everything about the date. Look at the dates at which news can take place. You can see it. Now you can see the time. This is a time like at which the news can take place, and you can also see the currency. You can see the impact, and this is just the news, like the name of the news, and this is the details too. When you click on this, you're going to be seeing details about this news. Now you can see that very actual I talked about, the forecast, the previous, and then the graph. These are very, very important, and believe me, they are the most significant thing you should be able to get your head around when you are analyzing a particular currency pair, like when you are implementing fundamental analysis. Now, before we go on with this very news, I would like you to do something. If you are still new in forexfactory.com, probably yours might not be looking like this. So how are we going to be filtering every news? Because we want to also always focus on news that have high impact. We don't want to do anything with news that have low impact. So that's why you're going to be going to this very, if you shake your chart closely, you should be seeing something that looks like a funnel. You can see mine here. So it looks like a funnel. So when you click on this very funnel something, you're gonna be seeing lots of things here. We have the expected impact. This one is the one like it speaks of high impact. Then this one is a low impact, like a medium impact. This one is a low impact. Then this one is like no impact at all. It doesn't have any impact. So we're going to be selecting the ones that have high impact most. That is why I'm going to be taking this only. You understand? I ticked it only. Now, on which currency should we be getting this very news? Like news, fundamental news about many currency pairs. Like which currency do we want it to always be showing? So I ticked every one of them. Like you can untick CNY if you don't want to be getting for Chinese yen, and I think I'm gonna be unticking it now. Now these are the invert types, like the 4 news factors that I explained. Every one of them, like all those very 4 factors that move the market, every one of them are all here. Every one of these fall within those 4. You can see there: growth, inflation, employment, central bank bonds, housing, consumer surveys, business surveys, species, MISC. So every one of them are good, so we're gonna be leaving them ticked. So now when you click apply filter, you will now be seeing news on what? On these very currencies now that I tick. Give me a few minutes. So now we are good to go. Now let's take for example, now this is I'm selecting the news for May. So I'm going to be looking at this very one more especially. Gonna be looking at, okay, now let's take for example on Monday, on Friday, no, there was no news. On Saturday there was no news. On Sunday there was no news. On Monday there was no news. And if you shake closely here, you can even jump to news. When you click on today, you see that of today. Click on this week, see that of this week. Click on tomorrow, you see that, but I'm choosing that of May. You understand? So now for this very AUD here, you can see cash rate. This very cash rate is not really an important something, even though it has a red tick showing that it has high impact, you understand, but it doesn't move the market well. Now when we go to AUD here for monetary policy statement, it doesn't even have any rate tick, so we're going to be leaving it. So but the news that I want to mostly focus on is what we call the unemployment rate. You see, one thing that is going to be guiding you is that whenever you're analyzing from forexfactory.com, and you should always check out, you saw what I said about the 4 major news that move the market, always check for them out, like here. Now we're going to be choosing unemployment rate because it is among. So yes, anytime you see in news that has the label unemployment rate, don't joke with it. Now for this very unemployment rate, it should be around on Tuesday, May 5. Then the time should be 11:45 p.m. Then the currency should be NZD, and then the name of the news is unemployment rate. Now this one is very powerful. Now what about the details of it? When you click on this, you're gonna be seeing the details of it. Now but look at what happened here. We have the actual, we have the forecast, and we have the previous. Now what is the meaning of this previous? The previous rate for NZD, the unemployment rate, the previous unemployment rate for this very NZD was around 5.4%. Now then the forecast was around 5.4%, meaning that investors are like, unemployment rate in NZD is not really that bad. If not, they could have predicted something slightly above 5.4%. so they're saying that everything is okay. Yes, now when the actual came out, it came out at 5.3%. as long as it was below 5.4%, should be good for NZD, because when unemployment rate is low, it's signaling a strong economy. Then it came out 5.3% below this very forecast, then it should make NZD very strong. Remember, it shouldn't be below this one, because most people are like, since it came out below this one. No, when this very news, whenever you are reading it, always use, as long as it came out below or above forecast. Stop using previous, always use forecast. You understand? Now that means that if we should go to our any card, like any NZD chart, around May 5, 11:45 p.m, NZD should be very, very strong. Now how can you even trade it? Let's take for example, this one is here to come out, and then you saw this very previous, you saw forecast. You can go to your ChatGPT, ask it lots of questions. What is going to be happening in NZD? What is going to be happening in this? Even use Reuters.com too, because I love using Reuters.com. is one of my favorite website, because when you go over to it, you're going to be seeing lots of news, hearing investors where they are disclosing their view about the markets, every one of them. So it's even a great way to start too. So now let's go. Then after everything, you should receive powerful confluences that should help you on how you can be able to trade this very trade, even though it is not advisable to always trade news. Personally, I don't like trading news, but I'm just explaining to you how you can be able to start navigating fundamental analysis. Now when I go to my trading chart here, I already got it out. Now this is my NZD card, and that means that on my NZD card I should be expecting buy, because unemployment rate is meant to be low, so NZD card should buy. Why? Because you know NZD is the base currency here, and as long as the particular currency pair is buying, it is signaling that the base currency is stronger than the hold currency. But if it is selling, it's signaling that the hold currency is stronger than the base currency. So now NZD is meant to be strong, so I should be expecting buy here. So I am currently on May 5. You can see May 5, and the time is 11:45 p.m. So let's go to 11:45. This is 22:15. I'm using 15 minutes time frame so that we can get this plotted out first. So this is 22:45. We should be looking for 23:45. Now this is 23:45. You can see it 11:45 p.m. Tuesday, May 5, 2026. Exactly what we have here on my Forex Factory. Tuesday, May 5, 2026 11:45 p.m. So now can you see it bought exactly? You can see the way it bought, and there wasn't any week here. That means that immediately the news dropped, it started to buy immediately. So have you seen it? This is also how you can be able to read news. It is also applicable in most other ones too, like in your in every other news. This one too is very powerful too. Like we're going to be choosing unemployment rate here for this very news. These are the ones that can move the market big time very well. Not that others can't, but this one has high impact. That of CAD, that of unemployment rate. That means that if you shake that of CAD, unemployment rate 6.7, 6.7, 6.9, that means it rose above forecast. That means that when you go to USD CAD around that very 1:30 p.m. USD like CAD should be very very weak. Now let's check it. Friday, May 8 on CAD, right? Friday, May 8, 1:30 p.m. Let's go again. That means Friday, May 8. So I'm still in May 6, May 7, May 8 by 1:30 p.m. exactly. So let's see what happened there. Okay. Friday, May 8th. Around 1:30 p.m. So this is 15:00. Okay. This is it. Can you see it? Like now, this news, what was this news all about? Unemployment rate. So now let's take for example unemployment rate. If it should high, if it should increase, that means it is going to be a bad signal for this very currency, right? So 6.7% previous, 6.7% forecast. They're like, okay, nothing really changed much, but unfortunately the data came out that now let's take for example you finish analyzing and you're like, oh, I'm expecting a high unemployment rate for CAD. So that was what exactly happened. Unfortunately it was very weak for CAD. Now when it came out, look at what happened. 6.9%, very weak. That means that NZD CAD should stay by. Yeah, the reason why NZD CAD should stay by is that it means that this one is weak, so base currency should still appreciate. Now look at what happened exactly. 1:30 p.m. 13:30 Friday, May 8, 2026. It bought big time. It bought big time. You can see the way it bought big time. So this is also how you can be able to use this to shake the market. Now USD unemployment rate 4.3%, 4.3%. It also came out at 4.3%. Nothing really changed in this very counting. The only thing that changed was non-farm employment changed, like the number of people that we employed. The previous one was around 85,000. Then the forecast we are like 65,000. Yeah, we're expecting low, but unfortunately it came out against like above this very one. Now had it been now that we are counting below, like using this very forecast, you can see that this 185k is still bigger than 115k. So that means that if we should do this very one, this one should stay below. It should still be written with red ink, but you can see that it was written with green because they aren't focused on this one again. They are like, at least it came out above forecast. You can see it 115k. So that should make USD stronger. Yes, can you see sense something? Even though this very percent are still the same, because most of you will be like, how then do I know, since every one of them are still the same? You can use this very non-farm employment change because this is USD. Yes, they are going to be adding it, non-farm employment. Even they added it here to employment change. You can see previous 14k, then this one 12k, then they were expecting around 12k people to be employed, but this one said that minus 17k have lost their job. So now this one is that 185k, 65k. They were expecting 65k because to them the currency of US is changing, like dropping a bit. But unfortunately something happened, something drastic miraculously happened. 150k got jumped below their expectation of 65k, even though it was below the past one. So that is why we use forecast to shake, not previous. You understand? So that means that anytime these numbers are same, you need to shake on these two. Yes, shake on these two. You understand? Because they can guide. And if we go to our USD catcher, you see that USD like appreciated, like any chart on USD, you see that it appreciated. So this is what you need to know about fundamental analysis. It's very very powerful. It's very very powerful. And if you want to get more your head around more things about fundamental analysis. I also have a book that is called Understanding Global Macroeconomics in Your Financial Journey. The book is very great. It's line for seller and also on Jumroad, and the link to that very book is under the description of this very video. So do well to follow me all the time, because you're gonna be learning a lot. Peace out, guys.